Hey. Hello, everybody. Belle, say hi.
Hi.
Somebody's not being that friendly today. It's all good. Anywho, how's everybody doing? Welcome. Anywho, welcome everybody. Do me a favor if you are watching me live, can you throw a one in
Hello,
the
all
chat?
of you.
Bella said, hey. If you watching me live, throw a one in the chat. If you're watching a replay, do me a favor, throw that two in the chat. And if
Okay,
you
right.
learned something today, oh, there's something
Yes.
going on. If you learned something today, do me a favor, show me some love, some fires, hearts, whatever, some type of emojis, something like that. Just let me know. Or just say, hey, I learned something. Ain't nothing wrong with that. Okay? Anyway, how's everybody doing this
And
evening? It is a lovely
and
day. And me and Belle got a ride to go on. So, I gotta come talk to y'all a little bit. But anyway, I know I've been talking a lot lately about the funding, but business funding that I'm helping small business owners get funding for their businesses. Because when banks say no, we can say yes. When the banks can't, we can. Okay. But we're gonna talk about that a little later. But anyway, I'm just gonna talk about some simple credit stuff real quick. Because this is something that can help you if you keep this kind of mentally in your head, you can it can help you keep your credit together if you are willing to, keep your mind open to it. And I'm just going to talk about the five factors that make up your credit score. Is very simple. And when I say credit score, I'm talking about a FICO score. I'm not speaking of a
the
Vantage
credit
score.
score.
Please understand, and I need to say this because I hear it all the time. Please understand a FICO score only has five factors, but a Vantage score has six factors. But guess what? Vantage scores, they really don't matter, okay? Because when you're applying for anything, if you're applying for a house, a car, apartment, a cell phone,
Whoa.
turning on utilities, life insurance, getting your car insurance. Nobody's saying, let me pull your Vantage score from Credit Karma or Credit Sesame or Credit Wise. Nobody is pulling Vantage scores. The scores they are pulling is FICO scores, and there are multiple different models of FICO scores depending on your industry and also depending on the actual business too. There's a lot of different types of FICO scores. Okay, so, the five factors, six factors are Vantage scores, five factors are FICO scores. Now, don't get me wrong; those are good tools to use to see what's on your actual credit report. So, I'm not saying they're bad or they're wrong. It's just that that's not what's being used to determine how much you're going to be financed or how high or low your interest rate is going to be. But they're good tools to see what's actually on your credit report. Okay. So, but FICO scores. Let's talk about it. The biggest chunk of your FICO score is 35%, and that is your payment history. How well are you trusted to pay your bills on time? And that's a lot of that. That's with your credit cards. That's with anyway. That's with any of your bills actually. Okay, so you got any loans, your cell phones, your car notes, your credit cards, all that good stuff. I'm mentioning credit cards first for a reason, and I'm gonna get to that in a second. But 35% of your credit score, which is the biggest chunk, is can we trust you to pay your bills on time? And that's a big determining factor of your credit score because that's 35%. That's a really big chunk, right? So pay your bills on time. How can you pay your bills on time without even thinking about it? Let's talk about automatic payments or automated payments. Like with your bank, okay? So, but let me explain to you what a late payment actually is. So, say your bill or whatever is due on the first, and you don't pay it till the third. Okay, so technically to the company you're late, yes, but you're not late to the credit bureau until 30 days after. So nothing is technically late when it comes to the credit bureaus until 30 days. If you pay something 30 days late, that's when it's getting reported to the credit bureaus, okay?
Yes.
Bella said yes, because she knows this stuff, okay? So 30 days. But like yes, if you're paying your rent and you got until like the 15th maybe to pay your rent, you'll probably get assessed a late payment penalty. Yes, but it's not late to the credit bureaus until 30 days late, okay? So 35%, can we trust you to pay your bills on time? The next biggest chunk is actually 30%, which is utilization, and that's where your credit cards come in at. So, your credit card utilization is how high are your balances or your balances in connection to your actual credit limits. Okay? Now, that is 30% of your credit score. But there's a myth that people think, oh, I need to keep all my credit cards at 30%. That is incorrect. Let me explain, let me actually break that down for you more simple. What you want to do is keep all of your credit card balances and all of your credit card limits at a 30%. Let me break that down for you. Say if you got two credit cards and they are $500 limits each, right? So you add those two together, that's $1,000, correct? Yes. What you want to do is not have your balances on each credit cards more than $150. Do the math with me. 150 plus 150, that's $300. The limit together is 1,000 of that 1,000. Y'all understand?
Yes.
Yes. So I'll say it again. All of your credit card balances should be no more than 30% of all of your credit card limits. Credit card limits balances between 1 and 9%, and that's how you will get the most out of that 30% of
30%.
utilization when it comes to your FICO scoring.
Yes.
That's how that goes. Okay.
Yes.
Now, if do me a favor, if y'all learning something, let me know. Oh, so y'all need any help? If you need help with your credit, if you need somebody to take a look, see what you can work on, you need help restoring your credit scores, I'm your girl. Text credit to 844-243-4901. Send me an inbox message. You can comment under this video. If you or your clients need help with your credit, let me know. I'm here for you because I'm going to also tell you how you can increase your credit scores. Um, with trade lines because that's how we increase our credit scores. All right, so we don't went over 35% and 30%. The next biggest chunk is 15%, which is the length of your credit or credit history. I'm gonna tell you how important that is. Let's say, for instance, you have a credit, you had a credit card. You had it for a long time. You ran it up and you finally paid it off. And you say to myself, yourself, you know what? I don't want to deal with this credit card no more. And you call the credit company and you said, close this account. You never want to do that because old credit is good credit. The older the credit, the better for you. That's how you get the most out of your 15%. If you know anyone who's paid off a house, they paid off a car, um, say if you paid off a credit card and you never use it again, guess what? The credit card company is going to close that account. So if you know somebody that's done any of those things, paid off a house, a car, credit card, something like that, never used it again, and their credit score went down, and you like, wait a minute, I paid the account off. Why did my credit score go down? Because it is a closed account. Okay? People ask me like, hold on, I just paid off my mortgage. I noticed 2, 3 months later my credit score went down. That's because now it is a closed account, and that's what happens. Um, All now you lose that credit history. Unfortunately, some people say, "Well, hey, I'll take it because I don't have a mortgage no more." It is what it is. But yes, when you close the account, that will knock your credit score down eventually because you're just you are taking away 15% of your credit score for that particular account. Okay, so beware of that. It does happen. It's like if you pay off a car, but then you decide to keep on driving that car, you didn't turn it in, you didn't, get a new car, something like that, and you notice your credit score drop after you pay it off. That's why. Okay. Same thing with a house. Same thing with credit cards. You had a credit card for a long time, and you stopped using it, and you see, and they close that account. Oh, now you see, oh crap, it
Yeah.
happens. But all right, so that's 15%. So we went over 35, 30, and 15. The next is 10%, which is a mix of credit. The two different types of credit are installment accounts and revolving accounts. So installment accounts are accounts that you get that you pay down each month, and they should never go back up again. Okay. Um, and that is stuff like your car note, your mortgage, personal loans, stuff like that. Those type of accounts should never go back up again after you start paying them down. Now, revolving accounts are those credit cards. Why is revolving? Because you're going to pay it down, use it, pay it down, use it. Revolving accounts, lines of credit can be revolving accounts as well. So that's 10% because you want to have different types of credit as well. Your mix of credit is 10%. So you want to have some revolving and installment accounts. So the next type of credit, the last 10% of your credit is new credit. So every time you apply for something and you get a hard inquiry on your credit report, that is, a lot of people don't care. That is inquiries. So every time you apply for something that's going to do a hard hit or a hard pull or a hard inquiry on your credit report, that's going to knock your FICO score down a couple of points every time. So I've seen people with a lot of inquiries because they keep applying for things and they know they're not eligible. For example, they go to a car dealership and their credit score is in the 500s. And what happens at a car dealership, what people don't know is that they will run your credit for each lender that they are trying to get you financed for. I done seen upwards of 50 and 60. Actually, I've seen higher people with 90 something inquiries. Not none of my clients, but I've seen other people had 90 something inquiries. But I've had clients with 50 something and 60 inquiries on their credit report. So if your credit score is already low, like, and then here's the thing, even if they do find somebody to finance you, what's going to happen is your interest rate is going to be out of this world. We talking about 15, 20, 25% interest rate. You'll never pay that car off. Okay, so either way is a lose-lose situation, but that's what happens with your credit. But you got people like myself who's going to help you get that together. Okay, so those are the 5 factors of your FICO score. That is 35, which is payment history, 30%, which is utilization, 15% is length of history, 10% is your mix of credit types, and the last 10% is inquiries for applying for new accounts. So, guys, just be smart when it comes to your credit. Seek a professional. Oh, goodness. Seek a professional to help you with your credit and also to help you increase your credit scores. And please stop looking at Credit Karma and say, "Oh, my score went down 50 points." No, it didn't. Okay, your Vantage Credit Karma score went down 50 points, not your FICO score. All right, but if you keep on applying for stuff and your credit score is low, it will go down 50 points because they're gonna keep on running your credit. All right, so with that being said, let's say if you need help, you can text credit to 844-243-4901. If you have a lot of
It's not
credit,
working.
if you have a lot of inquiries on your credit reports and you just want to get rid of those inquiries, you can text inquiries at that same number. I got something for you that can help you get those inquiries off. Okay. So once again, it's your girl Tyra. Like I said, do me a favor, show me some love, and I will talk to you guys later. Have a great night.